This is Nightly Business Report with Sue Herrera and Bill Griffin.
Amazon challenge. CEO Jeff Bezos calls on his rivals to raise worker pay. And the biggest retailer of them all strikes back.
Surprising winner. As fast-growing startups go public, there's one company that appears to be coming out on top.
Target big business. A $1 trillion tax proposal is taking aim at some of the biggest companies in the nation. Those stories and much more tonight on Nightly Business Report for Thursday, April 11th.
Good evening, everyone, and welcome. We begin tonight with the world's richest man, Amazon's CEO Jeff Bezos, and the dare that he laid down to rival retailers. In his annual letter to shareholders, Bezos challenged Amazon's competitors to top its $15 an hour minimum wage, saying that the country's workers will benefit if retailers compete on pay. His invitation stands in stark contrast to his usual shareholder letters that have historically outlined Amazon's long-term strategy. But as Rahel Solomon reports, that wasn't the case this year.
Amazon's Jeff Bezos did not hold back. Today, I challenge our top retail competitors, you know who you are, to match our employee benefits and our $15 minimum wage. Do it. Better yet, go to $16 and throw the gauntlet back. It's a kind of competition that will benefit everyone. Amazon's top competitor, Walmart, responding quickly with their own jab, tweeting a story claiming that Amazon had paid no income taxes for the last 2 years, adding, hey, retail competitors out there, you know who you are. How about paying your taxes? Walmart's president and CEO, Doug McMillon, explained that while their minimum wage is $11 an hour, their average employee makes $17.50 plus benefits.
We have great health care offers. We have changed our leave policy. Birth mom can now get up to 16 weeks paid leave. It's not just starting wage, it's the whole thing. And when you get the balance right in the whole system that you have, retention will go up.
So when it comes to wages or benefits, what's important to the American worker?
Ooh, that's a good one. I think the benefit.
Starting wage is so important because it's easier for me to budget.
Well, I'd go with paid time off. That was the most important. Just to be able to leave and not have to worry about it.
Money is great because we all have bills to pay, but I think there are things that are more important than that.
Younger people probably think, the starting salary kind of is more important, but it's the benefits.
The move to raise wages has reverberated across the retail industry. Today, Macy's CEO Jeff Gennette described his company's employee compensation plan.
We created this thing called Path to Growth. So every single colleague, all 130,000, get a quarterly bonus as a result of the production of that store, that call center.
Last week, Target announced it was raising its minimum wage to $13 an hour with a goal of $15 by 2020. These wage increases speak to the state of the labor market, with retailers spending more to attract the top talent. For Nightly Business Report, I'm Rahel Solomon.
And on Wall Street today, stocks closed little changed as investors get ready for the start of earnings season and the release of quarterly results from some of the big banks that are coming out tomorrow. But today it was a mixed finish. The Dow fell by 14 points to 26,143. The Nasdaq was down 16. The S&P 500 was up just 11 cents.
To the economy now, and a key gauge of inflation that posted its biggest increase in 5 months. The Producer Price Index rose 0.6% in March, lifted by a rise in gasoline prices. But despite the gain, economists say underlying wholesale inflation remains tame. A separate report shows weekly jobless claims fell 8,000 to below 200,000. That's the first time that has happened since 1969.
And the strong labor market is just one of the reasons why the vice chair of the Federal Reserve said today the U.S. economy is doing well.
We had a really strong year last year, 3% growth, and I think growth may slow a bit this year, but the unemployment rate's at a 50-year low. Inflation is, at our goal or slightly below. So the U.S. economy is in a good place.
And that sentiment was shared by the brand new president of the World Bank, who said today that concerns about slower growth are not coming from the U.S., but rather from Europe.
We are seeing slower growth, but as far as the U.S. and China, not so much of the slowdown is coming out of them. It's more coming out of Europe. That's something that people can work on. The uncertainty coming out of Brexit is a challenge for growth in Europe, and it's very, very important that that growth begin to pick up.
And speaking of Brexit, European stocks closed higher after the UK was given more time to figure out its exit from the European Union. The decision averts a potentially disruptive global economic event, at least for now. Late last night, European leaders at the end of a 6-hour summit said the new deadline would be October 31st. This is the second time UK Prime Minister Theresa May has been granted an extension. The president of the European Council urged May not to waste this time.
And another country in the global spotlight right now is India. It's one of the world's fastest growing economies, and it is hosting the world's largest election. Polls open today. And as Seema Modi explains, global investors are going to be paying very close attention.
It is an election like no other. 900 million eligible to vote, making India's national election the world's largest democratic exercise. The decision for voters comes down to this: allow Prime Minister Narendra Modi to continue as the leader of the country for the next 5 years, or give Rahul Gandhi, head of the Congress party, a shot. The stakes are high. India is one of the fastest growing economies in the world. The stock market up 70% in the past 5 years. And with over 500 million Indians connected to the internet, Netflix, Amazon pouring millions into generating Indian content. Facebook, Twitter working around the clock to get more Indians online while also combating fake news. India has given birth to a number of tech unicorns, Ola, Flipkart, among others, backed by major investors like SoftBank, Tiger Global, and Sequoia Capital.
The Prime Minister has outlined a vision and strategy for a digital India, catching a business model change, a social model change, an economic change, and a technology change in one, and he's positioning his country for the future in that.
While Modi is largely seen as pro-business, experts say some of his actions suggest otherwise.
The Modi government has moved further on increasing FDI caps in a number of different sectors, but it has also moved backwards on increasing tariffs to some extent.
And experts caution a more protectionist Modi might make economic policy a bigger concern for both citizens and foreign investors. Seema Modi, Nightly Business Report.
And here in the U.S., Senator Elizabeth Warren unveiled a plan to tax the largest and most profitable companies. It's a plan she says will raise $1 trillion over the next decade. John Harwood is following the story for us tonight from Washington. So, John, what exactly is Senator Warren proposing?
She's proposing is what she calls, Sue, the real corporate tax that would be 7% that would be levied on corporate profits in excess of $100 million. If you make less, company makes less than $100 million, small business, medium-sized business, wouldn't touch them at all, but 7% on that amount.
Why not just increase the existing corporate tax instead?
Well, Elizabeth Warren is arguing the corporate tax doesn't work. It doesn't capture a lot of corporate income because of the deductions and loopholes that corporations could use. Amazon, which you discussed earlier in the program, made $10 billion profit in 2018, didn't pay any federal income tax. What Warren wants to do is to apply the tax to the amount of profit that's reported on the financial statements to shareholders, where corporations don't have the incentive to reduce their reported profits. That's what she wants to capture, and this would be on top of the corporate tax.
It sounds like that would affect quite a few companies. And by how much?
Elizabeth Warren says that it would hit about 1,200 companies. That's based on an analysis from economists at Berkeley. 1,200 companies, and raise $1 trillion over 10 years. When you combine that with the wealth tax that she's proposing, as well as the increase in the estate tax, she's proposing altogether $4 trillion in higher taxes over 10 years. That's $400 billion a year.
John Harwood in Washington. Thanks, John.
And given that the deadline to file your taxes is just days away, a bill that was passed earlier this week by the House caught our attention. It's called the Taxpayer First Act. The intent of this bipartisan measure is to update the IRS systems, but one of the provisions would bar the IRS from offering a free tax filing service to the public. If this bill becomes law, it would be a big win for an H&R Block or for Intuit, the maker of TurboTax. not to mention all of the small local tax preparation services around the country. This provision was the result of an intense lobbying effort by the private tax service industry. A companion bill, by the way, has been introduced in the Senate.
So that got us thinking about corporate influence and lobbying in Washington. The National Association of Realtors, Pharmaceutical Research, and Manufacturers of America, as well as the American Hospital Association, were among some of the top spenders last year. Sheila Krumholtz, the executive director of the Center for Responsive Politics, joins us now to talk about that. Welcome, Sheila. Nice to have you here.
Thank you.
That's just, we have other companies that we want to talk about, but the story that Bill just brought us is one example of how lobbyists can influence the outcome of legislation. But is it always at one person's advantage over another, or one industry's advantage over another? Or sometimes does it really benefit the consumer?
Oh, certainly. There are bills that are lobbied on intensively and passed that do benefit the consumer. In some ways, maybe they are at a disadvantage in other ways. Very often, there are companies and industries pitted against each other, and there may be winners and losers. It's impossible to say it's always good or bad for the consumer.
We have the list of the top corporations and what they spend as well. You've got a Google, Alphabet Google, you've got an AT&T, you've got an Amazon. And they have various issues with the government. What do they get for their money that they spend there on some of these issues necessarily?
You know, the lobbying money is really where they cash in on their campaign contributions. So the campaign contributions buy access, and then their lobbyists, in some cases dozens of lobbyists or armies of lobbyists, can go march up to Capitol Hill and have their clients' perspective heard. So it's the opportunity to plead their case and try to shape policy coming out of Congress.
Does it get an AT&T Time Warner merger through? Does it keep Amazon from having to pay more in corporate taxes? What about the privacy issues that Alphabet and Google face, or the antitrust issues? Is that what they're going after here?
Absolutely. There's no guarantee, of course, that they're going to be successful in their lobbying campaign, but they hope they will be, and they're willing to spend, in the case of lobbying, billions of dollars every year to have that opportunity to shape policy and regulations.
That's examples of how it's working for the corporations. What's an example of where it actually worked for the consumer?
Well, you know, there may be different opinions on this, but there certainly were people lobbying for healthcare reform and for financial reform, reforms that were not popular among many health companies and Wall Street firms, but some consumers may view those as successes. So there are winners and losers, and there are consumers on each side of each fight. The question is whether the money is having the power over the policy, or whether it's driven by the merits of the argument.
Right. On that note, Sheila Krumholtz with the Center for Responsive Politics. Thank you.
Thank you.
Time to take a look at some of today's upgrades and downgrades. We begin with shares of Eli Lilly. They were downgraded to neutral from buy at Guggenheim Securities. The analyst sees limited stock gains, even though it has the best long-term growth prospects in the industry, he says. The firm removed its $134 price target. The stock fell more than 1.5% to $125.15. U.S. Steel was downgraded to underperform from buy at Bank of America Merrill Lynch. The analyst cited market conditions here in the U.S. Price target now $18. Shares were down 3% today to $16.69.
Chipotle was downgraded to hold from buy at Jefferies. The analyst cites the stock's valuation after a 65% gain in the first quarter. The price target is $700. The stock fell more than 1% to $707.53. Keurig Dr. Pepper was downgraded to underweight from equal weight at Morgan Stanley. The analyst cites concerns about growth rates for the single-serve coffee business. The price target is $24. The shares were off 4% to $26.87.
Still ahead, Boeing faces a number of questions about its plane that's considered a cash cow for that company.
It's been almost a month since the governments around the world grounded Boeing 737 MAX, and since then, Boeing says it has made progress, on a fix for the plane's flight control system. But how long until the MAX is back in the air, and will passengers be okay flying in it? Phil LeBeau takes a look.
Outside Boeing's plant in Renton, Washington, 737 MAX jets parked, waiting to be cleared for takeoff. At an event in Dallas, Boeing CEO Dennis Muilenburg said the company is making progress fixing the plane's flight control system, suspected of causing 2 MAX crashes.
Overall, our team has made 96 flights, totaling a little over 159 hours of airtime with this updated software. They will conduct additional test and production flights in the coming weeks, and we continue to demonstrate that we've identified and met all certification requirements.
Sources say Boeing will submit a plan to fix the MAX within a couple of weeks, but experts doubt the planes will be flying soon.
Well, I expect that the airplane is still several weeks away from getting the final gold seal of approval to be flown again. Not so much because the software fix is a problem, but just from an optics standpoint.
The FAA, already under pressure on Capitol Hill, will need to convince other regulators around the world that the MAX is safe to take off again. And that may take a while since the FAA stood behind the plane while other countries grounded it. The 3 U.S. airlines with the MAX are not planning to fly it again until late May or early June. And some think those plans are too optimistic.
Right now, we look at the month of September as the earliest possible practical date for a return to service, and there are a lot of unknowns there.
The big question, will travelers balk at flying the MAX?
I honestly wouldn't feel safe.
Would I feel safe flying a 737 MAX? If they have a fix for the software, I would.
Just like they rush it into production in the first place. You know, now they're trying to rush it back into the field. They got some work to do.
That work includes convincing regulators, airlines, and the public that the 737 MAX is safe. All have skeptics who will be scrutinizing Boeing's plan to get the plane back in the air. Phil LeBeau, Nightly Business Report, Chicago.
Uber has officially filed to go public in what could be the biggest IPO in years. In documents released late this afternoon, Uber revealed that it operates in more than 700 cities around the world. Its revenue rose more than 40% last year, but operating losses totaled just under $2 billion. The company did not disclose the market valuation it wants to achieve for the company with this offering, but it did say it plans to sell around $10 billion in stock.
And as all of these IPOs come to market, there's one well-known established company that's a surprising winner. Josh Lipton has more.
Big startups are taking the public market plunge, and deep in their financial statements, one name keeps popping up: AWS, Amazon Web Services, the company's cloud computing platform. There's Pinterest, which is expected to price its shares next week. The photo-sharing social network plans to purchase at least $750 million worth of cloud services from AWS through July 2023. Lyft will spend at least $300 million on Amazon's cloud between this year and 2021. And there are other ride-hailing companies looking to AWS too, like Uber, Ola, and Grab. Startups, like many companies, are shifting to the cloud, technology that lets them offload their storage and computing needs and access their data from anywhere. In that market, investors say AWS boasts key strengths. It was the first to market back in 2006, so the company and many of the startups now going public grew up together.
And now, after 13 years, Amazon has the longest list of menu of services, so databases, storage, logging, analytics, and increasingly they're becoming more global. So if you're a startup that's growing really fast and you need to expand to Europe, expand to Asia, go from 0 to 60 in 3 seconds, Amazon now can serve your needs anywhere around the world.
But Amazon also has plenty of competition. Microsoft has been selling into the enterprise for years, so companies may just stick with it. Microsoft's cloud customers include Chevron, Airbus, and Honeywell, just to name a few. Then there's Google. Investors praise the company's products, but say it needs a stronger sales force. Google's newest cloud boss understands that challenge, announcing plans just this week to ramp up his sales team. As for Amazon, its investors care a lot about AWS because it's the company's profit center. Last year, nearly 60% of Amazon's operating income came from its cloud business. For Nightly Business Report, I'm Josh Lipton, San Francisco.
PagerDuty makes its debut on Wall Street, and that's where we begin tonight's Market Focus with the company, the first notable software IPO of the year. PagerDuty helps technical teams spot problems quickly and respond to consumer complaints. The offering priced at $24 a share, and they soared on their first day of trading, up nearly 60% to $38.25. Meanwhile, Marriott and travel site Expedia have reportedly signed a new multi-year agreement. According to CNBC, negotiations were tense, but in the end, Marriott was able to negotiate a commission rate in the around 10% range compared to the previous 12% range. Shares of both companies rose in today's trading session, with Marriott up to $133.25. Expedia was at $124.59.
Tesla and Panasonic have put on hold plans to expand their Gigafactory. The $4.5 billion plant is where the two companies jointly make the battery packs for Tesla's car and energy products. Some investors have expressed concerns about demand for Tesla's vehicles, but in a statement, Tesla says demand for its energy cells continues to outpace supply. The stock fell more than 2% to $268.42. There are reports tonight that the owner of the Golden Nugget, Tillman Fertitta, and Eldorado Resorts are considering a bid for Caesars Entertainment. But according to CNBC, Caesars has not decided to put the firm up for sale. Shares of both companies rose. Caesars closed at $9.40, Eldorado at $48.97.
Healthcare reform has been front and center in Washington for years now, but of course, reworking the system has proven to be an incredibly complex undertaking. Well, that topic was in focus again today at the annual Congressional Democratic Retreat in Leesburg, Virginia. And that's where we find Ylan Mui tonight.
Democrats are planning to tackle the cost of prescription drugs and access to care in the coming months, calling it one of their top priorities.
I want to focus so much on health care because that goes right to the kitchen table, financial security of America's working families.
Lawmakers heard from Kaiser Permanente's CEO at the retreat. His message?
Stay focused on the affordability issue, and remember, it's not just one or the other, it's both. It's the affordability of coverage and the affordability of care. That is what the American people are suffering from.
He fielded questions from lawmakers on community health, chronic care management, and how the U.S. system compares to the rest of the world. As for big new proposals like Medicare for All, Tyson said that Congress doesn't need to go that far.
We have commercial, we have Medicare, Medicaid, the ACA, and other programs. I would argue that we have enough in the toolkit already to get to universal coverage.
Republicans have rallied against the idea, criticizing it as government-run health care. Instead, 17 Senate Republicans introduced a bill this week to protect pre-existing conditions.
These are, of course, better campaign slogans than serious solutions to the problems facing Americans. On the personal level, I have found that most people would rather have control over their own health care rather than have the government make those decisions for them.
One thing both parties do agree on is that prescription drug prices need to come down. Initial discussions are already underway between Democrats and the White House. For Nightly Business Report, I'm Ylan Mui in Leesburg, Virginia.
Coming up, why a proposed tax in New York is being called a triple bogey. Mortgage rates ticked higher. According to Freddie Mac, the 30-year fixed rate averaged 4.12% last week, and that was up from 4.08% the previous week. It also marked the first time in 7 months that it rose 2 weeks in a row.
Finally tonight, states with big budget deficits are always searching for new sources of revenue. Well, New York State is the latest to come up with one, but avid golfers are not going to be happy about it. Robert Frank explains.
A bill making its way through Albany would more than quadruple the property taxes paid by golf clubs. The bill in both the Assembly and the Senate would allow towns to tax golf courses at their highest and best use. That means that rather than taxing them as golf courses, they could be taxed as developable land. That would increase property taxes 4 to 10 times their current levels. The hikes would be especially steep for clubs in Westchester and Long Island, where development property is scarce. The New York Golf Association estimates that up to 1/3 of all the clubs in New York State would close if the bill is passed, costing jobs and a lot of economic activity. The state has about 250 private golf clubs and about 500 public courses. The bill grew out of a dispute with Trump National Golf Club in Westchester County. In his financial disclosure forms during his campaign, Donald Trump valued the course in Briarcliff Manor at more than $50 million. But his lawyers filed papers with the state declaring the value for tax purposes at only $1.4 million. Assemblywoman Sandy Galiff, whose district includes the Trump course, told me that too many clubs have used a legal wrinkle to get artificially low assessments, and that when you have some of these clubs, quote, not paying their fair share, everyone else in these towns picks up the cost. For Nightly Business Report, I'm Robert Frank.
And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.